should take a look further. 3.2% up last week. Very solid performance. This week could actually be even more interesting because we have more companies being added to the market making program. So some of the things on the agenda this week. Your thoughts on how you see this market going?
I think we had this chat about 2 weeks ago, and the key issue for me is that I still think that a lot of the recovery or the rally we've seen this year is more technical, rather than things having fundamentally changed. Yeah. The reality is when you look at the underlying economy, the sort of numbers that we got from a Dangote flour, for example, last week, perhaps underpins the concerns that everyone is having. Dangote flour, being the kind of business that it is, has a significant portion of its business in the north. And we saw turnover, start to slow down dramatically. That's the big concern that you start to hope doesn't start filtering to other sectors of the economy. So, I think that the presence of the market makers has obviously played a significant role in the sort of gas that we've seen behind the numbers. And obviously that expansion is also going to ensure that we have a bit more positive in that space. But you can't ignore those little signs that are beginning to, filter into the market, and you're going to just ask yourself that where do we see some of these companies, if the insecurity in the northern part of the country continues for the next year or so, it's going to start telling on the numbers, especially the non-banks.
Some people feel the government it's a tough job, but some people feel that they're making some progress in winning the war against the terrorists. Your thoughts on that?
Well, the reality is that when you have an enemy that's very difficult to identify, it's not exactly, the government isn't going to have this easy. That's the reality. You're basically battling against faceless people. And that's the biggest challenge that the government has. And it's not a Nigerian problem, it's a global problem. Go to Pakistan, you go to those areas where you can't really isolate a group of people and say those are our enemies. So I think that government will try and make it probably more difficult for the terrorists to just have a field day like they had earlier on in the year. And I think that business would also try to find a way around it. The reality is that there's a lag time between when these challenges show up and when business is effectively able to say, look, you know what, is that I'm diverting my products to other markets, or I'm going to find a more secure way to get my products to the market.
So this year could be the year of adjustments in a
So
sense.
this year could probably be the year of adjustment, and it will be interesting to see the sort of strategies that business actually applies to those things. And so for me, whilst I'm still cautiously optimistic about the market, I've always said that the risks really are on the upside, because you've got to always focus your attention on those issues. And if you also put that into perspective, there are all the fiscal issues that we've always been talking about. The budget numbers are out. There's still this debate as to whether to use $80 or $75 and all of that. It's an argument that government needs to have today. And let's have that argument. Let's achieve whatever it is that we need to do. Let's get that stability into the system. You've at some point you've got to side, with the House of Reps as well and the Senate. At some point, you say the reason why we've always had challenges with this economy is year in, year out, we always execute the recurring part of the budget to the letter, 100%. But the capital part, which is required for the economy to actually grow, and in a sustainable way, we don't focus attention on it. Another issue that hasn't really become an issue for most people is the floods as well. We don't know what's going to happen to food prices in another 2-3 months. That could be a major challenge from the inflationary side of things, because you've seen several thousands of hectares of farmlands simply just wiped off as a result of the flood.
Now, even the president alluded to that point, even in his budget speech.
In his budget speech.
That is a big question mark.
It's a reality, but it's a big, and when you think about it, agriculture is 40% of our GDP. So if you see a slowdown in agriculture, it could have significant impacts for the economy. And those are some of the issues that I think on the upside, could be potentially risky.
Of course, other things on the agenda this week include the sale of the distribution companies, if you like, phase 2 of the power reforms. And I think this is another key point. The government probably raised about $700 million in the last round. There's hope that they should when you finish this round, we should have at least $1 billion in the bag for the government. Your thoughts on the significance of this point? I do recall when they sold the Gencos, we saw the market rally. Some companies like Transcorp benefited from that.
Yeah, I think it's going to be positive for the country. I mean, I think that from our perspective, fixing power is a fundamental point of the Nigerian agenda for the next 10, 15 years. You've got to deliver power because the pedestrian nature of the productive side of the economy has continued to be a challenge. So I think that government being able to pull through with this is positive. The concerns I've always had around the power sector is the capital requirements from both the Genco side and more the disco side, because if you do diligence the discos and you look at the amount of capex that's required to get those guys to the levels where government is hoping they'll get in terms of their commercial and the technical losses, it is significant, and you just want to be sure that the financial sector is ready to be able to provide that capital that's required to actually ensure that, on a go-forward basis, you're able to increase productivity, reduce the losses, both from a transmission and a distribution point of view, and the ultimate customer, who we hope is the biggest beneficiary of all of this, will start to pay more. I mean, you get value for money effectively. So I think from a disco point of view and from the Genco point of view, ideally, everyone should be a winner. And the credibility of the parties that have been in this process is one that is also cheering. Because what I have always said is that this is perhaps the first privatization process that has happened in Nigeria that you can't doubt the credibility of the process.
Also with the power minister.
Yeah, I mean the power minister stepping down, rightly or wrongly, depending on whose views you believe in. But for me, and as an investment banker, it's just been very easy to have conversations with bankers, and funding institutions because they trust the process. And you have the World Bank's fingerprints all over the place. So it's positive, and we're just hoping that that's a sustainable model that we can actually use for government procurement. If Nigeria could actually reform its procurement process such that it's as transparent as we've been with the power process, then it's definitely going to be positive for the country.
Okay, final point. Moving back to this budget discussion, clearly you've raised some concerns about the capital expenditure and how that is executed going forward. But of course, the most sticky point right now is the benchmark price that would be used. The National Assembly calling for $80. The government, the Finance Minister making her case again over the weekend that it should be $75. Where do you see this going, and how critical do you think that number is?
The number is critical. It is definitely critical, because at the end of the day, we've got the excess crude account, which we all know is not legal, and this differential determines whether we get a lot more cash in the excess crude account or not. Now, the reality is that Nigeria has been very profligate in the last 10, 15 years. With all prices where they are today and where they've been over the last 10 years, we shouldn't be in a situation where the global crisis happened and we were scrambling. It's just a reality, because we had a head start up from every other person, but President Obasanjo tried to do as much as he could in filling that that excess crude account. The reality is that we can't spend like there's no tomorrow. That's just it. You look at it, and at some point something has got to give as well. The numbers today in the paper says government is spending about 600 billion naira servicing both domestic and international debt in 2013. That is significant. That is $4 billion of debt service that could easily have gone into production. Could easily have gone into fixing the rail lines, easily have gone into the roads. So from our perspective is that, look, it's not as much the number, but as much as how effective are we as a country with ensuring that the budget net numbers and the projects that the president has committed to are actually delivered.